Let's welcome on board Sanjiv Bhasin, who's joining in on the show. And Sanjiv, what happened yesterday? 1,100 stocks, I understand, hit lower circuit. There was quite a bit of uncertainty and nervousness in the markets, in particular for the broader universe. Is this just a shakeout taking place, or is that warning beware of the Ides of March running and ringing in your ear?
Good morning, Avan. So you remembered my caution, and that is what Julius Caesar was told. Now, even though we've always been on the bullish side, we had cautioned you that in the mid cap, be watchful, beware the Ides of March. And luckily, now we are coming to the 15th, where I think most of the news flow as far as negativity gets priced in. The opinion poll gave a big positive thumping to the reigning government. We think the advanced tax selling may be done with, and there was a lot of froth maybe on the mid caps, which is actually induced by SEBI's diktat and so on. So I think a large part of that is over. There can be still some residual part which can take place by today afternoon, but I would expect today, middle of the day onwards, market to stabilize. Avan, we've had a superb run. Like I told you, this is the time to be in large cap banks. Those are looking good. But I've just realized that copper is at a 2-year high, which tells me that China's outlook now is turning more and more benign on the upside. And if commodities and energy start to rally, then that could be another positive for global growth and India included. So we are using this fall to get into some of the PSUs, particularly the metal side, NALCO, Incopper, Hindalco, JSW. These are going to be outperformers, which we think, and some of the oil marketing companies, HP, BP, and ONGC. So that basket now is looking very good. But like I said, there could still be a little bit of a residual part of sell-off, which can take place maybe today and tomorrow for the reasons given.
Private banking names, the metal PSUs, the OMC PSUs is something which is still on the buying list, and Mr. Bhasin believes that probably the worst of the sell-off or the shakeout will be, will be done by midday today. But just bringing on board the strategy notes coming in from Bernstein in Kotak, because they don't agree with the view that Mr. Bhasin has. Bernstein says that the reality is that we were in a bubble. It was only the strong macros that was stopping the massive corrections. Maybe we should pull up those graphics on screen as well, because the small corrections that we have seen this week and the YTD corrections do not alter the valuation equation. The valuation still remains quite rich, and the investors with high risk appetites, the likes of Mr. Bhasin perhaps, will likely bottom fish, but the view remains unchanged that large caps are better and it's tough to generate a large positive return this year, and volatility is going to be the name of the game. Kotak also believe that most of the mid cap and small cap stocks still trade at full to lofty valuations. They're well above their fundamental value despite the sharp correction that we have seen, and they're not sure if the correction marks a reversal of the market to fundamentals and the numbers away from sentiment and narratives. Many low quality stocks will continue to slide, and that's of course a view that we have also had, that it's no longer the rising tide phenomenon that everything will work out. You will have to get very, very selective with your bets as well. But talking about being selective, Mr. Bhasin, seems like there's a negative news flow this morning on the likes of Federal Bank as well as South Indian Bank, where RBI has stopped the issuance of new co-branded credit cards. What's your view on these two stocks? Will this be a buying opportunity perhaps on these names? Because Nomura believes that credit card was only 1.5% of the total loan book of Federal Bank in any case, so not a big impact.
Correct, Anisha. Firstly, coming down to your large broking houses, they are, what we call Barsati Mendak. Till yesterday, everything was hunky-dory. They missed the mid-cap rally like a wow. And now when there is a correction, so the sense sitters will obviously jump in and say valuations are high and so on. This was a bull market which had actually seen a lot of fraud, but that's typical of the markets. And corrections will be fast, severe, and very fast recovery. So I am not in the camp which says that there was fraud and that will be unbundled. But you will have to see more flows into mid caps and so on. And this is just a matter of time that the consolidation takes place. We still think that select mid caps have a lot of value, and but like you said, we are also preferring the large caps, and that is where we are putting our money. On Federal Bank, it is a must have in your portfolio. All their other, like you said, just 1.5% of their credit card business is co-branded, and their other businesses are doing extremely well, particularly the gold loan side, which they've increased the market share, and their agri and MSME loans have done well. Plus, their NIMs have been one of the best in the industry. So I would use any decline today in Federal Bank to be a buying opportunity. As a disclosure, Federal Bank has been on our shopping list in the last few days.
Latest news with respect to the Reserve Bank. And what's your take then on Coal India? Jeffrey's latest note says that the stock is trading at a steep 57% discount to the Nifty 50 PE, and they've got a buy rating. What's the view on how Coal India has been performing?
Well, Awan, like I said, the PSUs are just having re-rating of their value. Who thought the valuation of Hind Copper or a HPCL or a Coal India will start to see? And still there is lot of opportunity on the upside. I still think given the demand for thermal and the coal outlook, arguably it's in the top 5 players in the world. And now with merchant coal taking a large part of their share, their margins are only going to see an upside. The same is the case with Hind Copper. It's the only company in India which has copper cathodes. The rest do TCRC margins. And if copper prices are at two-year highs, this stock can be re-rated anywhere till 400. So we have both Coal India and Hind Copper in our portfolio, and we would use these declines to systematically add some more. But like I said, we are more now positive on the energy side. So ONGC, HPCL, and Hindalco would be some plays over here. But yes, this energy stroke coal play, thermal play, these are also looking very, very attractive.
Energy / coal plays, metal plays is something that Mr. Bhasin likes. But since we are talking about metals, we'll shortly get Somit also to join us to talk to us about NMDC specifically, because it seems like there's a sharp fall that has happened in the seaborne iron ore prices across the world. And Kotak now believes that perhaps there is going to be another decline in the month of April. We'll get Asesha to join us shortly. But before that, I want to go across to Kunal and get his view on the likes of Hindustan Copper, Coal India and NMDC.
Well, I believe many of the stocks are actually getting into an oversold territory. In fact, I was looking at the slew of PSU stocks which have corrected by a margin of 30% to 40% on an average, and there are many number of names which have actually corrected by a margin of 30 to 40%. Coal India, for example, I think from 490, 495 has come back towards 410, 15 levels. So that itself is a correction of almost 20% for the stock, and we are talking of typical low beta stock and a larger cap name in that sense. So I would believe that this could be a very good buying opportunity for traders who have missed out or looking to add or accumulate further for many of these names. So maybe another 5% on the downside for these stocks. I think that could be a very good entry opportunity on a contra basis for most of the names that you mentioned: Hindustan Copper, Coal India, ONGC, etc.
Okay, and in fact, speaking of, let's get in Asesha then to talk about these seaborne iron ore prices. They've actually slumped 18-month lows, lower by 25% in terms of their prices. So Asesha, walk us through what exactly is the impact of this?
Well, yes, iron ore prices continue to fall. In fact, seaborne iron ore prices are down nearly 25% in the last 1 month alone, and they've now fallen to 18-month low levels below $106 per ton. So significant fall in iron ore prices is expected to impact iron ore producers the likes of GMDC, NMDC and MOIL. Now, the key reasons are, of course, weak Chinese demand, higher iron ore inventory levels and lack of cost support. These are the 3 primary reasons why iron ore prices continue to fall, and as I mentioned, they are down nearly 25% in the last 1 month to below $106 per ton. Now, NMDC went ahead and hiked prices by nearly 35% in the last 8 months, and NMDC's fine prices are at a 35% premium as compared to export parity. Now, higher iron ore prices helped NMDC increase its export sales by as much as 147% in 11 months of FY24, and hence it is expected to come in as a major negative. Now, Kotak Securities has come out with a very interesting report. They say that the major bulk of volume growth is perhaps behind us for NMDC. NMDC could probably go ahead and cut prices in the month of April 2024, and they also say that that surplus in the iron ore market is expected to rise in FY25. So very negative. Brokerages too are very negative on NMDC, and the fact that iron ore prices have fallen is a big negative for iron ore producers the likes of GMDC and NMDC.
Okay, so NMDC might be under pressure on account of those prices, but the superstar of yesterday was clearly ITC. Right, Mr. Bhasin, what a stellar show. I mean, despite the weakness in the market, that stock was up 5%, saw long build-up, and then the likes of GIC, IPRU, UTMF, Miraset, Aberdeen, you name them, they bought in the block deal yesterday. What's the view from here on? Do you think the overhang is away and now the stock is in for another leg of rally?
Well, also first let me comment on iron ore prices falling is also positive for steel companies and cement companies because that's a key ingredient in their input. So someone's loss will be someone's gains. And that's why I said the metal composite, copper, aluminium and thing which are mainly dependent on iron ore as a input cost. If those prices fall, they will be laughing their way to the bank. On another note, I think you forgot to mention HDFC and ICICI Bank, which have been two of my top picks to hide in. I think they are going to lead the next leg of the rally. And ITC, definitely that overhang being over. Now you will hear more on the demerger, if any, of the cigarette business. Because once BAT reduces its stake, then it will be ITC which will be in a winning position to decide on the demerger. If you really recall, around 500, the 10% demerger of the hotel business was not very well appreciated by the market, hence this correction. And people in the know of the overhang of this large block deal were aware. That's why the price was available. I still think now ITC, HDFC, ICICI Bank are going to be key outperformers. Hence, the view on the Nifty would be more benign. And we think the mid caps will again consolidate stroke languish till this overhang of regulatory and other things gets cleared. But numbers will be the ones which you should be watching out for.
Thank you for joining in and sharing with us your outlook on the markets as well as individual stocks and sectors.
If you like this video, then like, share and subscribe to ET Now.